Simplicity doesn't precede complexity, but follows it. My friends, we've worked very hard to take the complex and to make it simple on these charts. You just would not believe how many different indicators and how many years I spent to get to the simple charts that we have now. And everybody says, but how do you know when you've got the right chart? And it's very easy, because it works. Now, does it work all the time? Absolutely not. We can go back on this chart to right here where we had a fake out. But how long is this? Look at this. This is over a year. This is May 2022, the end of May 2022, when we had a down move. Things ended, popped up, and then rolled over. However, we would have gotten out this week, jumped in, and could have ridden that down for a decent profit at 1 ATR on the 2-day chart, if you had the wherewithal to pull the trade when it wasn't working. So again, everything's about your ability to pull losers and then let your winners ride. That is why we use one average true range on the 2-day chart while we're trading off this weekly chart, and we sell half the position. You can see right here when we hit it, and we let the rest of the position ride until we either have enough profit, the trade ends, we get nervous, there's a reason for finally pulling it. You will see that we did not capture all the gain here or all the gain here in the down move. And again, those of you who are new to this might be saying, why would you buy the S&P 500 when it's going down like it is now? We're not buying the S&P 500 in our practice trade. What are we buying? Well, if you're not into options, you can buy something like the ProShares short of the S&P 500. Look at this. It's going up the last 2 weeks. Why is that? Because, of course, it's a short fund. Now, there are all sorts of things to know about it. We got a good training on it. In fact, I'm going to post it at the end of today's video, Inverse Funds, How to Make Money When Markets Crash. And I want you to practice trade these inverse funds when they make sense. Now, people say, oh, they're double and triple. They're ultra shorts. I don't go for those. If I'm satisfied with making the one-time movement on the underlying chart itself, I'll do the same on the inverse chart. And again, the fees are a little lower, and you don't have anywhere near the risk, because the risk I'm taking here is built on these charts, not on a triple or a double inverse. So those who don't know what I'm talking about, take this training first. You'll know more about it. And again, want you to practice trade all this stuff. Remember, not a stock calling service. We're an education firm. Want you to learn with us, practice trade to show yourself approved. You start throwing real money in the market when you don't know what you're doing, and I guarantee you the sharks will eat you. They will consume you very quickly. Be like a seal swimming with killer whales. Let's jump into these charts. Everything going in the direction that we are. I have all, red flags over here on my symbols. You don't see those, but what I do here is over to the right-hand side of the chart where I have my symbol index. Those of you who use TradingView are aware of that. I put the little flags there on the far left. I tag them as to whether or not it's an up trade or a down trade. Green to match the candle when it's up, red to match the candle when it's down. Well, last week I went red on all of them. So a couple I think I'd been red before, but what do you see going on? You see continued down movement, down 0.73%. Look at the stair steps going down on the 2-day chart. We ended the latest 2-day candle today. And again, below the weekly trend line on both the 2-day and the half-day. Let's move on to the NASDAQ 100. Same thing, down even more, 1.06%. And again, lower low, below on the 2-day and the half-day. And we just see things continuing to move down. Now, how long will they go down? can't tell you that. I can tell you that we will continue to follow things. If we start seeing our half-day chart breached and then our 2-day chart breached, that is breaching the candles, breaching the weekly trend line. Remember, the weekly trend line we set here on the weekly chart, we have it set up to be on both our 2-day and our half-day, and we follow it. We pay close attention to what the volume is on all of these charts. You can see the high volume at the end of the day as the market was plummeting down, and there was high volume on that half-day chart. Okay, so far we're just now over halfway through the week. We'll see if we reach the average volume or exceed it. We'll keep an eye on that because, of course, that matters for those of you who've taken our volume training and understand what that is all about, a.k.a. Jesse Livermore. Let's move on to 20-year bonds, down 0.71%. Again, stair steps heading down, going into the third week after it got sloppy here. We see, of course, price well below on the 2-day, well below on the half-day, and decent volume, above average volume on the 2-day, average volume on the half-day. It's good to see as far as hopefully continuing to move in the right direction. What about gold? Gold down for the day 0.58%. We look at where we are again on the 2-day chart, looking at the weekly trend line, well below it, very well below it on the half-day. Things moving in the right direction on our short gold position. What about Bitcoin? Well, it is down again today, but what we see happening is, again, a very, very flat trend line. Doesn't excite us. We do want to see it continue to go down so that maybe we'll get a reset and we'll get a great signal to jump in on the next up move. As I keep telling you, we saw things flatline starting in November, mid-November, at the end of last year, and then, of course, starting in January, up, down, but hitting higher highs each time, but then rolling back and scaring the dickens out of you. So we'll watch. We want Bitcoin to reset itself so that we can hopefully be able to chart this better. I started charting Bitcoin not because I thought it was chartable, but because you guys wanted me to. And we found times when it is, and so you will find this with stocks and ETFs. There are some that are very chartable during certain seasons, during certain periods, maybe a year, maybe 6 months, maybe every spring. I mean, as you pay attention to the ETFs and stocks you're interested in, you'll start learning their personalities, like your own children or your own friends. And you will know when you can count on them and when you can't. Some are just unchartable. That's sort of like a kid you just can't control, as opposed to one that you can always count on. So you don't count on the kids you can't count on, and you count on the one you can. And then sometimes everybody goes a little crazy. And when that happens, you just have to take your loss and then get ready to reset and see if you can start counting on it again. That is where we are at the end of the day. We so appreciate you being with us. Make sure you're following us on Twitter and also on YouTube. And please subscribe to Charting Wealth. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters, Patreon members. God bless you.